Hi, everybody. This is Gary Dean, and this is our weekend video report for Sunday, April 3rd, 2016. So, Friday looked like we were going to start some type of pullback that is long overdue, but it ended up being just another buying opportunity for the Bulls, and they closed it pretty strong. I think a big reason, I don't really, I don't really have any rhyme or reason as far, why this just assault of buying has hit the tape over the past couple of months. I mean, when we were at the lows, it made sense because we were very oversold. We had the bullish divergences on, on the daily charts, but now we have, bearish divergences on the daily charts and just about every other chart. But I think a big reason has to do with the NASDAQ, and I pointed out that you have the S&P and the Dow that are already at the 78% retracement. And even with the NASDAQ with a 1% move on Friday, still has a little ways to go to get into the 78% retracement. And the NASDAQ's been pretty much leading things. Any kind of decline, it's the first one to kind of reverse and start up. So I think a lot of it is having the text coming up and getting to where the S&P and the Dow are. That's giving us this underlying strength and on each really decline that we have. Now this is the Dow. You can see that we are already at the 78% retracement. And if I show the I can have it on the 60. Oh yeah. So here's the S&P, and you can see we're already above this the 78 as well. So it could be a reason. What really is happening is they continue to buy the moving averages on the S&P. You can see we touched there. We also touched the bottom of this wedge, which has been broken a few times. If I just kind of draw the original wedge, you can see we broke through it here. Now they're forming yet another wedge, which you can see they're buying the bottom of it here. And, even though we've, the market's been extremely strong, it doesn't really make it safe to jump on the bull side right now. And it's, as much as it's, I sound like I'm saying it's a broken record, and I'm saying this every time because the market continues to move up. But, we still have these bearish divergences. We have this bearish wedge. You have bearish divergences on the daily chart, very overbought. So does it mean that the market has to turn lower right away? No. Eventually it is going to. And, it was the same when we had this big move here. Everybody was jumping on the bull wagon when we were up there as we were forming the bearish divergences and very overbought. And right now I'm seeing a lot of the pundits become very bullish, and we're at some resistance, bearish divergences in place, very overdone. We haven't had any really proper pullback since these lows, except for the one that got bought right back up again, and that was I forget what, I think that was the ECB or something that took off on that. But in any case, these straight up moves, they're hard to predict exactly when they're going to turn. But when they do, they turn sharply. And I thought Friday may have been the start of things just because we were opening down pretty hard after the job numbers, and it would have made sense. But, as I had pointed out, once we got down to the moving average, we found buyers and then closed up strong. So one of the reasons why I'm confident that we, will be heading down is if you look at the moving averages right here, this is a 200-day. It's declining right now, and typically what happens is when it's declining, we're going to come down and test the this is the 50-day. We're going to come down and test the 50-day moving average. So that's all the way down at the 1958 level. And again, it's the declining 200 that is that's giving us the clue that we are going to come back down and at a bare minimum test the moving average like we did here, and then we came up and tested the highs again, and when we didn't break them, that's when things fell apart. So that's kind of really my reasoning on, on believing that we are going to have a pullback before we continue, straight up. And a lot of that has to do also with the the internals that I've been showing, which I'm not even going to continue to go over just because they're just getting over and overextended. But the thing is this, is that it's frustrating to be watching this and expecting, a drop, and it's just not dropping. But it's, the technicals are telling us that we will, we are going to get this drop at some point. And that's really about all, we have. If they continue higher, you want to keep an eye on this 2080 level. Really, the momentum part picks up if the bears can push it through this the 2020 or 2019 or 15 area. And really, the first clue would be if we go through this 2058. We did that on Friday. One of the reasons why I thought we were going to continue lower, but we went back up, and this is the support. So if they can close below this 2058 on a daily basis, then we're probably going to see the move down to the 2022. If the bulls don't hold that, that's when I believe that we're coming down to the 1958. So right now, like I said, the market's strong. It's we're finding buyers on each dip, but it doesn't make it safe. And really, the main reasons are just the lack of any kind of true pullback or test of support, as well as the bearish divergences on the daily charts. So with that, enjoy the rest of your weekend, and I will talk to you guys in the morning.